First and foremost, my name is Sean Kozak. As always, as the CEO of Tickblaze, I like to welcome everybody to today's marketplace webinar with the team here at Tickblaze. When we do these presentations, I normally like to start by just going over a few groundkeeping rules. We are recording it. We will send out a recording. We will go over everything in detail, and then at the end, we'll do some Q&A, so we can basically assess the questions and go over some examples. And I assure you, this is a presentation that I wish we had years ago. I really wish we had this software a very long time ago. It takes a lot to impress me. I've said this a few times, but not very often. And this is one of those times where I'm just going to share a little bit about my personal view on the markets. I've been developing software since 2015. Probably one of the largest software developers in the world on trading platforms. We have the largest marketplace, second largest marketplace in the world on Ninja. We have a huge marketplace growing on Tickblaze. In the last, just shy of a decade, I've learned a lot about trading through developing systems and developing software, creating indicators, creating algorithms, creating strategies. Sometimes we stumble upon things that are innovative. Sometimes we flop and we build something and it doesn't work. And it's like, okay, that's part of the business, right? And there's just things that exist that a lot of people don't even know is available to them. And they're not available because they're not either developed or companies haven't created them. Or sometimes people have tools, but they're not being taught properly and nobody really understands them. And sometimes things are just so damn complicated that everybody wishes they weren't complicated because they know there's importance to this information and yet nobody's there to teach them, right? So in all of my years, including footprint charts, everything that we learn as a trader is either to the current bar or backwards, right? Like even in a footprint chart, you're seeing orders execute in the bar, but that's executed order flow. Even order flow at its granularity is still lagging to the fact that it doesn't tell you the intent of the market. It doesn't tell you the liquidity of the market. It doesn't tell you what's happening to the hard right edge of the market. And therefore, what happens, as much as everybody in this industry tries to say that they've got a leading advantage or that they're not using lagging information, it's just not true. It's just undeniably facts that everything that exists in the business is always to the current bar or to the left. The only thing that exists in the world for trading the hard right edge is inventory. Okay, inventory. Inventory is the depth of market, the depth of book, also known as the dome. And it's the only thing that is in advance to what's about to happen. Now, what we're going to do today is we're going to talk about, we've created a heat map, and the difference with what we've done with our level 2 order flow heat map is far and few just incredible. Like, it's not even about the visualizations, it's the strategies that can be used with this, which I truly believe, if you learn what I'm about to share with you today, I honestly can't imagine a day where you would ever have your market open without this software. Now, whether you choose to use this tool or not, that's your choice. But I've been trading a very long time. And since I finished developing this inside of Tickblaze, we didn't build this on the NinjaTrader side. We've only built this on Tickblaze. Since building this on Tickblaze and watching it in real time and assessing the information, I honestly don't think I'll ever look at the markets the same ever again. How many of you guys have learned something from me over the last, I don't know, years of watching me present? I mean, I'm not here to say I'm the best. I'm definitely not the worst. But how many of you guys have actually valued from anything that I've taught or any information that I've brought to the table, or I've shared with you some wins, I've shared with you context, right? Everybody knows me to be somebody that takes very advanced, complicated shit and make it very easily digestible so that traders can actually trade it. Yes. I am here to decode level 2 inventory in a way where even the newest trader or somebody that has a lot of experience is going to be like, okay, like this is a game changer. Okay. And that's what my promise to you today is. I am here to literally change the game for you when it comes to day trading, the hard right edge of the market. Okay. And I don't think you'll ever look at the market without this software. And there's a reason for it, and we're going to get into that. Are you guys okay with that? Give me a yes. This is a hard right edge trading system. This is both a software and a trading system. One thing that I will tell you though is that you will need a level 2 data feed. Okay, so let me explain the trade-off. Okay, level 2 costs a little bit more every month. You can get it through prop shop. You can get it through any prop firm that you're trading with. You can buy it through DX feed. You can buy it through Data Bento. But you do need a level 2 feed. Now I'm here to tell you right now that if you don't buy a level 2 feed and use this software, okay, you're really literally trading blindfolded to what I'm about to share with you. Okay. Level 2 data is nothing compared to literally one trade in the market. You make one good trade in the market every month, you pay for your data feed, period. Okay. Everybody here agree with me? If I could give you an edge that can drastically move your profitability to the top and to the right every day, you should be like, I have to pay for this data feed, right? I mean, you're talking like $100 a month. Like it's not expensive. If I can show you how to make thousands and thousands of dollars a day, would it not make sense to pay $100 a month for the data? Give me a yes or no. Does that make sense to me? Okay. Now, I don't expect you to go and buy the data feed just yet. I'm going to prove to you what you need to understand here. You'll probably buy the data before I'm done the webinar. I'm certain about. Okay. So as always, guys, I need to cover a quick disclaimer. I do need to go over regulations. Can everybody here just please do me a favor and take a second, read this, understand it, look at it. I'm not here to give you advice. Can't guarantee anything other than education, common sense, practicality, software, all that stuff. I'm not your broker CTA, and I don't really care about how much money you make in the market. I care that you succeed in all of this, but it's your job to manage risk, all that fun stuff, right? Past performance never guarantees future results, and we're probably all going to lose everything that we've ever had and end up homeless on the street because we're all gambling, right? Does that make sense, guys? Like, all things aside, all jokes aside, regulators need me to put that in there. And, you give me a yes in here if you accept that disclaimer so we can move forward like professionals. Yes? Fantastic. Okay. So I like to lead with a promise. Why? Because nobody promised me anything when I learned. When I learned how to trade, the people I learned how to trade from, they sucked. Like they sucked so bad that I spent $25,000 learning shit. Right. And like we're talking long time ago. Right. And, I'm just grateful that, we have what we have now to be able to provide you what I wish I had when I learned this stuff. Right. And there's a lot of people in here, a lot older than I am, probably a lot more experienced than I am. Maybe you're more knowledgeable than I am, but there's a difference between information and actually results. And so I normally like to lead with just results. Okay. And the way I look at doing this is this isn't some shiny object. I'm not going to show you something that exists everywhere around the sun. This isn't some basic tool that you can just get on some forum or whatever the case may be. Right. I am going to show you a tool set that we've spent a lot of time and money and resources to build. I'm not just going to show you the tool. I'm going to show you how to make a lot of money with the tool. Okay. Now I can't tell you how much money you make because A, it's illegal and I can't guarantee anything, but I can tell you this. If you learn what I'm about to share with you, it will change the way in which you trade forever. You will not trade ever the same way ever again. Why? Because you're going to have a level of information that you didn't have before. And therefore, I am going to give you an edge that you've never had before. That is a promise. I am about to give you some edge that you've never, ever had before. Why? Because even if you've maybe seen something of this or heard something in this, you have never traded the strategies that I'm about to share with you because they are mine and they are how we look at this information. Okay. And you can trade it every single day. You're going to want to trade the markets that you have the data for, right? You need level 2 data. So this is for equities and this is for futures. You're not going to have this on Forex or crypto. Okay. And it is for markets that have depth of market. Okay. Now, does everybody understand that? That's a trade I took yesterday. And the day before that was nice. It was a nice, really great trade. And we'll get into the trades in a second. But yeah, does everybody okay with that? Simple promise, but I will deliver on this as we go through the event. Now, no, and one last thing. How many here have ever found the dome to be complicated? How many of you guys have looked at the dome, inventory, depth of market, and found it to be the hell with this shit? I can't figure it out. It moves so damn fast. I don't know how to understand it. I can't make sense of what the data is telling me. Give me a yes that you've ever felt that the dome or the depth of market is, yeah, exactly. Jennifer says, I can't even look at it, right? I promise you, Jennifer, by the end of this event, you'll never want to trade without looking at it. But you'll never have to use the dome because we've built software that removes the need for it. We're going to talk about that. Okay. So let's get into this. My promise is to make it super simple, super easy, and super tradable. Okay. Now, this is the agenda. I'm not going to go over a bunch. Oh, and there's the trade. I scaled out and made a lot of money on that trade. Okay. And we're going to go through a bunch of information. This is the information we're going to talk about. My goal here is I just want to get into the trades. I want to get through the information and into the trades because it's really what matters the most. And we're doing special pricing for this because we've got some crazy giveaways. We're going to give some free licenses and all that stuff here. But does everybody understand this? We're going to go through some details, and then we're going to get right into the charts. We're going to look at today's trading. I'm going to go bar by bar, show you exactly where the trades were, exactly where you can place these trades, and you're going to love this. Okay, everybody okay with that? Give me a yes if this agenda makes sense to you, and we're going to kick off. So what happens in trading the hard right edge is very different than trading the left edge. Okay. The hard right edge hasn't happened yet. And so it is the hardest thing because nobody knows what's about to happen yet. But let me explain something. Once it's happened, everybody's a genius. How many of you guys have said this? Oh, I knew the market was going to do this. You've looked at the chart. Oh, I knew the market's going to do that. I've done it. And then I slap myself upside the head because there's no way anybody can tell you what the market's going to do to the hard right edge unless you have information of the inventory of the market. Why is this important? Because the inventory of the market is what prints the bars on your charts. The inventory of the market is what gets executed and creates what you call a footprint chart. So even footprint charts in order flow are after the inventory. Okay. A great example, saying, yeah, we're going to talk about it. Yeah, we'll talk about bookmap comparisons and other aspects of the software. And yeah, absolutely great example. Yeah. So we'll talk about that today. Okay. So let me explain something. The only thing that creates a market is the depth of book. Nobody can see it. Nobody can understand it. So everybody puts an EMA on their chart, or they put indicators on their chart. They put momentum oscillators on their chart. They mark up support and resistance on their chart. They mark up this and that. And there's a lot of ways to make money, guys. This is the trading industry. Like there's a lot of ways to skin the cat. But there is nothing that will ever replace the inventory because the inventory is what you're trading. The inventory is what is moving the market. In fact, it is the market. It is not the chart bars. It is not the tools on your chart. It is the inventory. It is the free market that is global, that traders in Asia, traders in Dubai, traders in New York, traders in Chicago, they're all placing orders simultaneously, randomly, at any given time, whether they're a hedge fund or a retail trader or a family office or whatever the case may be. And every day is different. Every day is different. There's similarities, which means every day the inventory is different. That's why sometimes you'll have a strategy and it'll work sometimes and it won't work other times. Why? The inventory is not the same. Just because the pattern's there doesn't mean the market's going to support it. How many of you times have ever bought in a support level, all things lined up, and it didn't work? How many times have you ever sold a pullback in a trend and all of a sudden it just ran right through the indicator and it's like, oh shit, what happened? Like the inventory wasn't there to support the thesis. And this is what a lot of traders don't know is that you are trading blindfolded to information you don't even know exists. Does this make sense? You don't even know it's there. And this doesn't mean that order flow executed, like footprint charts, imbalances, this is not inventory. This doesn't tell you what's about to happen. It told you what happened. And what happened doesn't mean it will continue to happen. And this is the biggest lesson that I've learned ever since building this software, is that even order flow, despite having a lot of influence in power in the market, doesn't necessarily mean it's going to give you intent. Order flow can tell you what happened, but that doesn't mean the market's going to respect it. And this is very, 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 very different between executed order flow and unfilled liquidity. So write this down. This is very, very important. I'm going to type this here. I'm going to type this in the chat box, okay? There is a big difference between executed order flow and unfilled liquidity. What do you think moves the market? What's moving the market? Executed order flow or unfilled liquidity? You guys tell me. Samir says liquidity. Anybody else want to agree with Samir? Or like, don't. What moves the market? Executed order flow or unfilled liquidity? The market will only move where there's liquidity. If the executed order flow executes, but the market doesn't move, it's because there's a balanced market, and therefore balance must eventually seek unfilled liquidity. You cannot have a market move unless there's an imbalance in the liquidity. And therefore, the only way you're going to see that is in the inventory. You will not see that in an order flow footprint chart. An order flow footprint chart will show you what happened. They both have an impact, but I'll tell you right now, the unfilled liquidity is going to tell you what to expect the market to do. Okay. Now, let's get into this. I took these trades this morning. Okay. I took these trades this morning. We're going to get into this. Okay. And we're going to talk about this. I literally took these trades. I took 5 trades. They were all scalp trades. Okay. I'm going to explain to you which ones were the better trades and which ones were the dangerous trades today when we're looking at direction and how to trade direction versus non-direction. But every single trade I took was off a liquidity level. A liquidity level that is set in the inventory. Okay. Does everybody see 1, 2, 3, 4, 5? Those were those 5 trades are taken this morning. That is this morning's price action. Okay. Literally trading that market. I was in and out literally less than 20 seconds on every single trade. 15, 20, 30 seconds on every single trade. Okay. I made more money in 25 minutes this morning, obviously in that example, than most people make in an entire month. Okay. Now, why am I telling you this? Well, first of all, is that these levels, when you understand what they're telling you and how to trade them and how to set the software up properly, can change everything that you're doing. Literally. And you can use it in conjunction to anything that you're trading. In fact, I would encourage this. If you're using other software, or if you're using other indicators, I would not trust those indicators without this software. Let me explain something. If you're going to trade a supply or demand level, or a support or resistance level, or if you're going to trade a pullback, or if you're going to trade a divergence trade, or if you're going to anything that you are doing, I would never execute unless I had this in conjunction to that trade. Why? Because this software will actually tell you if that trade's going to work or not. How would you like to know if your trade has an extremely high probability advantage of working or not? How many guys are left guessing, I hope this trade works when I take it? Or it goes up and down and you see it moving when you're in the market and you're like, I really hope this trade works. What if you had a tool that removed that fear or that guessing? Honestly, like, wouldn't that change the way in which you approach the market? That every time you look to take a trade, you have way less fear, way less doubt, way more certainty in how you're going to expect the move of the market. Yes? Give me a yes if that makes sense to you. Make sense? Unless everybody wants to run blindfolded and afraid, I just need to know where your head's at. Because I'm going to tell you right now, there's been many times, even with a lot of experience under my belt, I've had the time where I'm like, I really hope this trade works. But I didn't have any information to tell you that, right? This software will do this for you, okay? Now, get a lot of questions. How is it different than like other tools? I'm just going to keep it super simple. These other tools are next to impossible to understand. I've used them. I've looked at them. Now, they're great tools. They're great. There's great products out there. I just, as a really, really experienced trader, could never really understand how the hell it worked. It's complicated. It's very difficult to read. It's very difficult to understand. It's very difficult to set up, and it's very difficult to trade. So for me, I don't like to make things harder. Yes, information is power, but at what cost? I like to keep things really, 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 really easy, really clear, really simple to trade. Okay. Great question. Jim is saying, how is this different than Striker? Striker is options, open interest, and liquidity in the options chain. This is liquidity in the actual market. So you could overlay this on Striker, and I promise you, you're going to have grand slam trades, period. Grand slam freaking trades. Insane trades. You're going to see levels of confluence that you've never seen before. Now, everybody here, what about Bookmap? What about heat maps? What about this? What about that? Guys, I know these companies and I know these products. They're great tools. I just personally can't trade them. I personally don't like the way they're designed. I don't like the way that they flow. That doesn't mean they're not great people or great software, that other people don't use it. The reality is that I just don't like the way it looks and how the technology moves. So when we build software, I like to be able to keep it super lean, super clean, but very, very effective, right? How many of you guys would agree that the charts on the left are a lot harder to understand than the charts on the right? Yes or no? How many of you guys would agree that a bunch of bubbles and circles and a bunch of stuff that I can't even understand it, versus just looking at a price chart and I can show you clear levels on a chart, specific levels. Make sense? That's what we're going to do. Simpler is tradable. It's not about being better or worse. It's about what is actually easy to trade. Okay. And that's what we're going to talk about today. Okay. So this is what inventory looks like in the market. And this is not tradable. So this is not something that you would ever look to trade. It's really sexy. It's good for marketing. It's really good for a website, and it's really good for a post on social media, and it's really good to say, holy cool, look at all that shit, right? But that's not something that you can trade, okay? But let me explain something. That's what this is. All of this up here is the sell inventory, and all of this down here is the buy inventory, and it's being added and removed constantly. There's spoofing, there's pulled orders, there's iceberg orders, there's everything under the sun. And what happens is, what needs to be understood is, how do we take this inventory and turn it into alpha that is extremely powerful? Well, it has a lot to do with the settings. It has a lot to do with understanding how to read the information. And it really has to do with understanding, am I going to trade directionally or counter directionally? Okay. And we're going to show you exactly how to do this. Okay. Now, why is this important? Because this over here, this is the market, not your charts. All of this is inventory that needs to be filled, and all of this is inventory that needs to be filled. And as the market seeks the orders and finds liquidity, the price of the market goes up and down and up and down and up and down. The problem is, this shit moves faster than the speed of sound, and I can't make sense. Like, I know there's a few good dome traders out there. Hell, we got one who runs our head of QA. And I'm telling you right now that I just can't. Like, a 15-year trading veteran, it's just very, very difficult to trade the dome or trade the ladder. Okay. And what's going to happen here is, I'm going to turn it into this. And I'm going to take this and I'm going to turn it into this. And then I'm going to explain how to trade the levels. I'm going to explain where to buy and where to sell. How many of you guys would agree that going from this, okay, which is just everything under the sun, to this can now be looked at objectively? If I show you that chart, how many of you guys can see the price bars? Okay, much easier on the eyes. Let me explain something. This is a downtrend. This is an uptrend. This is a downtrend. Make sense? This is the top of the range. This is the bottom of the range. There's a reason why this wall is here. There's a reason why that wall is there. These are called walls. Okay, these are walls. There's walls in the market. When you have walls in the market, this is where the market will stay in ranges for the day. How would you like to know here when the market's trading here and all of that is forecasting out and the market's and all of this is forecasting out and we're not even there yet, you can expect to see what's about to happen in certain areas before it happens. This is going to give you leading information, right? Market trades to the top up here. And at that time, at this bar, if you come all the way down, that wall was there. This is printing in real time, and we're pulling the depth of market, historical depth of market on a second feed. And what's going to happen is we're going to come in, and this is going to keep building, 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 building. The whole time this trend is coming down here, this started to build here. There was what we call a mini wall. You know what those mini walls are? That's the profit-taking objectives. That's where all the sellers up here at the top know where they're going to actually get their exit. They can start unwinding their trades. The people that actually look at the depth of market, that actually institutions, people that actually have order flow tools that need to understand size of book. If I'm going to put big size up here, I need to know where can I exit that book of business. We're not moving the market. They are, but they also need to make liquidity decisions. So as this market traded here, as soon as that pullback happened right there, this started to build. And as the market trended, push, 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 this extended out. That's your target. A lot of traders get out of trades way, 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 way too soon. They don't even realize that you could be holding onto the market for much bigger moves, right? When you don't even realize where the market's going. Okay. And so what's going to happen is you can come in here and you can say, okay, there's the big wall. This is a massive wall. And this is why they come in here and they fill that and then they just rip it back up. And then guess what? They're coming all the way back up to test that wall. Why? Because that's where the wall is. This is the profit target objectives. These little white, little yellow, that's where they're going to take their profits. Now we're going to talk about this because it looks really great in hindsight because it's not happening. It seems really great in hindsight because anybody's a genius with a picture, right? Like it's a genius as a picture, right? But I want to explain the concept first. And then you can see that this level, this level right here started plotting here. Like here, guys, which means the market had to go all the way up and all the way back down before it tagged that level. But that's a nice scalp. And this level started plotting here and it started printing all the way out here until there, which means the market moved all the way here. You had all those bars to see where that wall was building. Comes down, takes a nice trade. You could have been watching the market here, knowing that this is the strongest level because of how long it stayed solid. That's where you build big long positions. Fading up here on the short side, clearly that's the short that you want to be paying attention to. That's what we call a massive wall. And that happened today off the open. That's why I was scalping those walls the way it was. But in trending markets, it's different. In trending markets, I'm going to show you how to properly trade a trend versus fade the level. There's two ways to trade liquidity, and you don't want to be on the wrong side of it. Because a lot of people, their brain works backwards. They think, oh, that's a sell level. I should be selling it. No, you shouldn't. You should be waiting for the market to absorb it and then wait for the liquidity to come on the other side, which gives you conviction of the move. And we're going to talk about that. It was the biggest lesson I've ever learned in order flow. It took me 10 years to learn it. And I just recently had an aha moment. And I'm like, holy shit. And as I watch it, I haven't been able to look at the market the same. And I'm being honest with you. Like there's a difference between selling and educating and actually just sharing with you personal journey and growth as a trader, right? So let's get into this, okay? So here's a great example of another, this is another example. Okay. So this is a great example of, just looking at it from a different perspective. You can see the pivot points. You can see the reactions to these walls. The bigger the line, the longer the line, the stronger the impact, the stronger you're going to see it. And what's interesting is that if I had this chart and I didn't have those lines on here, you would have no idea as to why. You would say, oh, this just sold off here because we're at resistance. Had nothing to do with that pivot. It had everything to do with this being here. And you can't see that. Do you understand what I mean? A price action trader is going to say, oh, yeah, that's a support or resistance. Oh, that's a pivot high, pivot low. Yeah, but that doesn't mean the market's going to respect it. How many times do you see the market blow through tops and blow through bottoms? And you're like, oh, that didn't work. Right. And then other days it just respects it like perfectly. Right. Yeah, we're going to look at 5-minute charts today, Andy. I was looking at 1 minute, 5-minute charts. We'll look at it all day. Yeah, no problem. So we'll get on the charts today in an example here, right? Just let's get through this. So I want everybody to take a picture of this. This is essentially a list of all the features that come with what this software can do. I don't like going through a lot of words. I'm not really big on like reading text. It is a hard right edge system. It's an inventory based system. It's the only thing that I know of in the industry that can give you an unfair advantage to the hard right edge. And I'm going to share with you stuff that like this has been, we've had this in our back pocket for a very long time. We actually had to make a lot of changes to Tickblaze's core infrastructure as a platform to be able to support this. And yeah, you could rename it to Crystal Ball. Yeah, you could rename it Sky to Crystal Ball because it's the only thing that's going to tell you what is liquidity. Yeah, makes sense. We didn't have to fix bugs, Joe. We had to build new technology in the back end and how Tickblaze handles the data because we have to cache the level 2 data with unlimited depth. So like, and we're talking about like not all level 2 feeds provide you unlimited depth. Like you go and you buy level 2 feeds from like Kinetic and stuff on Ninja, you only get 10 levels deep. If you use depth of market from say DX feed or any of these other market makers that provide data, they're going to give you unlimited depth of feed. So like when you choose where you purchase your depth of market from, there's a big difference between unlimited depth and depth. And we provide that, which is really, really unique. Okay. So we're going to get into that here in just a minute. Okay. Now, I want to talk about absorption and rotations because this morning, okay, this is this morning. Okay. I want to share with you. I scalped, this was the walls that were at the highs, and this was the walls were at the lows. This was the market open. Okay. This was the market open today. And I traded these walls. I traded these levels. We'll go into the chart in a second, take a look. But you're going to see something, okay? The market open, okay, came down, push. I took a bounce, came back up. I took a short, came back down. I took a long, came back up. I take a short, right? What are we doing here? What are we doing? What's happening? up and down, sideways, right? We're in a small, tight range until the market picked a direction, okay? But here's the important part. You see these 3 walls right here? And you see these walls right here? Okay. Whenever we get through that, okay, when we get through these walls, this is very, very important you to understand if you're on the right side of the market. A lot of people were shorting here. A lot of people were shorting here. I took a short, but I did not take a short for a very long objective. I took a short for a very short objective. Why? Because I'm paying attention to the fact that these walls got chewed through, took my scalp, and then as the market started to, do you see anything in here? There's nothing in here. There's nothing. And then as soon as these little green lines popped up here, that's when the trend happened. That's when the next push happened. And where do they go? They go to the next liquidity. So what we do is whenever we see these walls get chewed out, you wait for the market to chew through them. You wait for the market to chew through it. And as soon as you chew through this information, you look for the opposing order book to appear. You would look for sells. And I'm going to show you today, it happened crystal clear. As soon as the walls get chewed through, you look for the other side to show its hand. As soon as the other side shows its hand, you know you're on the right side of liquidity. And then you don't have to worry about, okay, what's about to happen. Okay. And we're going to talk about this today because there's a difference between fading and there's a difference between trading with the flow of the market. Okay. So here's a great example. Okay, here's a great example. Really, really, really big walls for rotations. The key here is that these are reversal trades, and reversal trades should only ever be done on very large walls. Let me write this down. Write this down. Reversals equals walls. Don't try to fade small levels for big trades. Why? They're not meant for that. Small liquidity will only move the market small amounts. Large liquidity will move the market large amounts. So when you see a line starting here and it keeps going here, 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 or you see it starting here and it just keeps going, 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 that's the difference between this level here, this level here that got pulled. You see how there's nothing here anymore? All that liquidity got removed from the market. All that liquidity got removed from the market, which is why they came down to this one. Does everybody understand this? And then take a look at this. The market comes in off the big wall. Where does it go without any hesitation? It goes to here, right? It goes to there. That's profit taking. That's where you would start to take your profits. Not here, not here, not here, because there's no liquidity. Why would you give up this much of a move when you can see that that's where sellers are stacking, right? Very, 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 very good discussions you should be having with yourself. Why make 1,000 when the market's saying I'm going to give you 5? Now, that's not easy to do when you don't have the right information, when you don't know where things are. It's next to impossible to just guess, oh, I think it's going here, I think it's going there. Your thinking is not what's moving the market. I can promise you that 10 times out of 10. Okay. So let me explain this. This is a trade that Jim took. Where did that wall start? Like, we're talking hours. Hours. That wall's been there for hours. Like, that's the fun part about this. This wall was there for freaking hours. This wall was there for hours. This wall was there for hours. This wall got removed, which is why it pushed through. Okay. There's a lot you're going to learn in this, and we're going to teach you this, but I'm here to tell you right now that when you understand this, you will never, ever look at the market the same way ever again, because this is the market. Let me explain something. Your indicators are not the market. Your strategy is not the market. Your trading plan is not the market. It is you. This is the market. This isn't me. This isn't my indicator. This isn't my special secret sauce. This is the liquidity of the order book in advance, made simple with strength settings, so we can change the settings from the pre-market into the live market, because pre-market liquidity is different than big market liquidity. We're going to talk about that. Okay. But these are trades. Take a look at that. Okay. Now you can see things here. Okay. You can see things. Now I'm going to ask you what do you guys see here? Okay. Impulse legs versus corrective legs tell a story. Okay. They tell a story. If you think about this, this is an impulse leg. This liquidity came in here. They came up to the liquidity. Sure, they overrun it a little bit, but we're not talking about just fading here. We'll talk about that in a second. Came all the way down to the impulse leg. Where did the impulse leg stop? That freaking wall was there for an hour. No, maybe 25 minutes. 7:50 to 8:05. That's 15, 20 minutes. You guys get that? That's important to understand that. If I'm trading this trend down, okay, this is, you got to, like, if you're, you know how many traders see them take out the floor, they start shorting here and they're hoping that it's going to go here, but they don't even know that that's there? Do you understand that? Do you know how, you know what would be really, really amazing is that if you had a stochastics on here or an oscillator and you had a divergent signal that came in here, push, 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 right? And you had all this liquidity in here and you had confirmation that your indicator has liquidity backing your indicator, that is what you should be looking to accomplish. You should be looking to take whatever you're doing and slapping this on the chart so that you never ever guess what your indicators are likely to do. That is like the best gift I could ever give you for 2025 and for the rest of your career. Because you want to know what? All your indicators are rendered useless without liquidity that supports the market. Once in a while, you're going to get lucky and they're going to work. But what you're not realizing is that under the chart, the liquidity was there to support that indicator at that time. Because let me explain something. Okay. There's millions of traders around the world. They don't know what's on your chart. They don't know if you're using a MACD or an oscillator or an EIMI, whatever. They don't. So you can't say that everybody's looking at the same indicator and they're all using that indicator so that that's why the indicator worked. How many of you guys understand how serious of a conversation this is? If you're going to be a trader, like, and I'm going to call it as it is. If I'm going to be a firefighter, I'm not going to show up to a burning building with the wrong clothing. You understand what I'm saying? Like if I'm going to go to a gunfight and I'm a SWAT team, I'm not going to show up with a balloon. I'm going to have an AK-47. I'm going to go packed with ammo and my teammate's going to be there because that's what the job requires. In trading, you don't show up with a bunch of lagging oscillators on your chart to a market that is only based on liquidity. And this is why we spent so much time and money building this into Tickblaze, is because this is the foundation that everybody needs. Okay? This is the foundation that everybody needs. Not wants, not that I think you should have. Everybody needs this. Because people that use this are going to drastically change as a trader. They're just going to trade with information that they didn't even know existed. And it's not a bunch of bubbles and shit on your chart that nobody can understand. Now, here's a great example. How long was that wall there? That wall's been there a pretty long time. Look at the level. Like, just look at that. That is incredible. You could draw all those boxes on your chart all you want, but that level is what stopped the market, not boxes. Your draw tools aren't doing anything for the people. You know how many times people draw an order block or a supplier demand zone or a support and resistance zone and the market just doesn't respect it at all? Do you know how many times people have lost money drawing on their charts thinking that, okay, this is the level that's going to hold, and it doesn't? Millions and millions of people around the world have blown their accounts, ruined their careers as a trader because they thought what they were doing is going to work. It just didn't work. Well, I'll try it next time tomorrow. Do you know how many times prop firms sell evals and have resets because traders don't actually know what they're doing? Because they don't have tools that are going to actually help them? It's a serious epidemic. It's a serious problem. And it's a very expensive problem, right? This trade I took this trade to demonstrate a concept. We were in an oscillating market. It was the longest wall on the chart. I took the long. Very little heat. It went all the way up and hit my target. Okay. Take a look at this. Okay. There's a big difference between the long lines and the small lines. Write this down. Long lines are powerful. It's as simple as that. Long lines are powerful. Write that down. Long lines are powerful. It's how many of you guys know the difference between a short line and a long line? I mean, if right, like that's a short line. That's a long line. Lesson over. Lesson over. And it's not necessarily size. What this is showing is intent of those levels. What this is showing is the people that are trading the market, that are making the market move, are not moving their decision. Those things are there for a reason. Their job as a big trader to fill big books of business, they're not moving their market. If those lines are there and they disappear, it's because they were either spoofing or they pulled the order book or their decision changed. Does this make sense? Small lines are small lines. Big lines are big lines. Lesson over. Everybody understand that? Give me a yes if that makes sense to you. Because it's a very important lesson, but it's a very easy lesson. And this is the whole point of what I tried to build is our team took complicated things and made it very, very easy to trade, very powerful to trade. Anybody that does not use this software is at a disadvantage to everybody tomorrow morning that is. I can promise you that. Now, took the short this morning. That was a great short, right? It was a really, really great short. No, that wasn't this morning. That was 2 days ago. My mistake. What I like about sideways markets, and when you can start to see that the market is in a sideways price action, I look for the walls. Why? Because that is exactly where they're keeping the market. When the market is going sideways, look for the walls. It is the easiest way to make a shitload of money. A boatload. A boatload to one guy might be one contract. A boatload to another guy might be 50 contracts. Whatever your boatload is, I don't care about the amount. But what I do care about is that when the market is going sideways, pay attention to the walls. The walls are where you trade really, really, really good trades, and they work really, really well. Make sense, guys? When we're in a trending market, I'm going to teach you how to trade a trend. It's really easy once you understand what to look for. It's very easy once you know what to look for. So what we did was we built a tool that took really, really hard information to understand, and we visualized it on the market. Now, let me explain something, okay? Let me share something with you. Not all level 2 feeds are created equal. It doesn't matter the bars, Deborah. You can use any bar on the chart. You could use candles, you could use roses, you could use tulips. Data is data. The bars have nothing to do with this. This is depth of market. Whatever bars you're using, the depth of market will still show there, okay? So let me explain something. Some data feeds provide unlimited depth of market. Some data feeds provide limited depth of market, 10 levels deep, etc. I'm going to check. I don't know if Rhythmic allows for unlimited depth of market. I think it's 10 levels deep. Okay. DX feed is unlimited. Unlimited. Okay. Now I have some news. I don't have exact confirmation. I don't have timing. In the meantime, I would highly encourage DX feed level 2 data. I have DX feed level 2 data. That is what I am using. Why? Because it gives me unlimited levels of depth. Tickblaze is in the process. Okay. Tickblaze is in the process. Data Bento as well. Data Bento has unlimited depth of book. Yes. You could use Data Bento as well, Jason. Yes. My mistake. Yeah. They're both very, very good. So either one is great. Yes. Here's the thing. Tickblaze is in the process of becoming a vendor of record with the CME. Why? Because we have a big prop firm expansion coming in 2026, and we're going to be directly distributing market data for the Chicago Mercantile Exchange. I don't know how many levels of depth we will have. We don't have that data for sale yet, so we can't sell it to you. So in the meantime, I would highly encourage the DX feed data. We will provide you the links to buy the data. It's inside the members area inside of Tickblaze. It's literally inside the members area on Tickblaze. Just get the level 2 feed, right? Get the depth of market feed, okay? We took this to make it simple and easy, okay? And we did a very good job of it. My hat goes off to our dev teams and our ops teams and our programmers because they're really, 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 really doing really, really big things inside the Tickblaze platform. Okay. And so let me kind of go into this and like, I'm going to play a video for you guys now. This is literally a video. And I'm going to play this. I don't think there's any audio, so we'll see, but this is us filming it. Okay. So you can see the orders. You can see the liquidity coming in here in the market, right? You can see the market. And then you can see this wall coming in here. Boom, 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 boom. It just comes, right? Take a look at this wall right here. It just comes. And look, there's nothing here stopping. There's no walls here. There's no sellers. So they go all the way up to the liquidity. It's that simple. The wall was here and it lifted all the way up. Right? The walls are the key. Look, the wall is here, lifted all the way up. There was the wall. It came all the way back down. The wall was here, came all the way back up. It's that simple. It's that simple. Okay, let's continue on to show some other examples. Let's do the one on the left. Take a look at the walls here. Okay, look, there's a massive wall here, massive wall here, big wall forming here. Okay, yeah, that's a great example of there's a liquidity sweep here. Guess what the liquidity sweep is showing you? That it's there. Do you know what happens? A lot of times people think there's a sweep here, but there's nothing there to support it, and the market just goes all the way down to sweep that low. They're like, well, that one didn't work, right? That didn't work. Yes, absolutely. If you're trading here, this could be a target. This could be a target. 100%, Peter. Yes, because the market is going here. It has to go to there. It has to go here eventually. Okay, you understand that? Well, there's actually three colors on the buy side, three colors on the sell side. It has a lot to do with the size of the orders, and we're going to talk about that. But yeah, let's get into this, guys. Let's play this one here. So let's continue down. Let's watch it as it trades. You can see it. It's coming down. You can see the wall. It's there, and it just keeps coming, and it just keeps climbing. And there it is. There it is. Boom. Hits the wall. Doesn't get any prettier than that. Then now take six. Stop right there. Stop. What's happening here? Liquidity's coming into the market, right? Liquidity's coming into the market. Okay. Which means sellers are stepping in. Does that mean they're going to stop the market there? No, but liquidity's coming into the market on the opposing side. You can see it. You can see that's where they're going to go to fill that order. Look at the reaction. It came in at that time. You see it? There it is. They attacked that liquidity. It was right here. They attack it, and there it is. Boom. You can see it in real time. It happens. You can see this was forming here. This was peeking its head here. But do you notice how it was only small lived? Like it was a little bit of liquidity, and then it was a line and then disappeared. Okay. They're pulling the orders. It's liquidity that's either getting absorbed or they're pulling the orders. Same thing here. It came in, it absorbed that orders, but that's the retracement. Do you understand what I'm getting at? And there's a big chance they're going to come all the way up to tag that wall eventually. You can see the buyers down here pilling it. There it is. Look at the reaction. The buyers came right into that level and got a reaction. Now, as a scalper, that might be all you're looking for, right? That's a good example, right? And there's a difference between trading wall to wall. These are not walls. There's a bigger level. Do you see the reaction you get off the bigger levels? Like, take a look at this. You get little reactions off little levels. You get bigger reactions off bigger levels. Imagine that. Imagine that. It's that simple. Let's continue down. Let's take a look at the one on the right. Look at that white line came in. That white line is big liquidity. Big liquidity. White's big. Oh, you can change the settings. There it is. Tagged it to the tick. Tagged it, filled the orders. Absorption came in, filled that liquidity. They're walling it. Boom. It's that simple. Really, really clean trades. Big orders coming in. You can see it. Well, they have to fill the orders. Going through the level is the market's, Yeah, the S&P and the NASDAQ. Look at this. Look at the wall here. So let's take a look at this. They came right up to it. The only issue is, okay, look at this. There's nothing there anymore. So what does that mean? That means it's not there anymore. They pulled out, the orders are not there anymore. It was there. So they come in, they absorb whatever was left there. And then you start getting buyers now coming in on this side. Remember what I said about the absorption in the levels? This is a continuation. Okay. That's what's going to happen. So we'll get into that. Does that make sense, guys? You can use it on any time frame, any chart. It's just how you see it. Here's another example of a heat map video. Let's just play this. Take a look at this wall here. Big, big wall. Hits the wall. I think we played this video already. But either way, it's just good to see it. There's that liquidity comes in. Watch it as it's happening. It's interesting as it takes it, and then it just trades right through. There's no wall here, so the market's going through it. The market goes up here to hit this stuff up here. Boom. Interesting, eh? how it works. It's really, really amazing software. It's really, really designed to just, it's like when you're in the forest and you're lost and you hear the wolves and you just don't have any fear, right? Like it's that simple. Okay. So let's do this, guys. I'm gonna keep going through. You guys want to see today's price action? You guys want to see today's price action? So bear with me, guys. I have to load Tickblaze. Of course, Tickblaze crashed on me. Interesting. Well, Tickblaze crashed on me, so I don't know if it's going to show me the orders, which is unfortunate. I may not be able to see it, guys, because Tickblaze crashed, which means it might not have the orders on. You have to have the software running, but that's okay. Give me a second, guys. I'm going to log in. Yeah, my historical data will be gone, but I'll be able to show it in real time. Going to load this software, guys. It's going to load Tickblaze. Give me a second. Bear with me, guys. I'm going to set it up. No, I'm using a dev build. I'm using a dev build, so it's different. So let's look at it in real time. When you load the software, so I'm just going to share this. Give me a second, guys. We load the software. Okay. You can see things in real time. So what we're going to do here is I'm just going to explain something. You see how fast this order book is moving? You see how fast this is moving? Like I don't even know what the hell any of that shit tells me. Like, like I can't, like, I know it's important, but like I can't see it. Like I don't know how to trade it. I mean, sure I could, et cetera, right? Et cetera, et cetera. So in reality, I want to be able to use a tool that takes that information and tells me what's happening. Okay. Tells me what's happening. Let's go over to the dark side. Let's live on the dark side. Okay. So I'm going to turn this pin off because we don't need that noisy shit on our charts. Okay. And I had a bunch of examples shown here, guys, but because the platform shut down, I can't see it, but that's okay. We will go through here and we'll explain it in real time. Okay. So you can set this to a second chart. Okay. Right. You can set it to a second chart. You can set it to a minute chart. I have it on a minute chart. You can set to, but you can see right now inside, if I double click the software, let's just go in here and just take a look at this. We can see the liquidity levels in the market. Okay. And understandably, like one of the things that I like to tell traders is that I like to just, is there direction in the market? Like I got two EMAs for direction. So I'm not fighting the trend. So here's the thing, right? Like if these EMAs crossed to the downside, this would not be something I would want to fade long. I would wait for the liquidity to come on the sell side of the market, right? If I know I'm in an oscillating market, I'm going to trade the highs and the lows, right? That's and when you set this up in the morning, I like to come up, I get up, I turn it on, and then basically I go grab a coffee, I go to the gym, whatever you need to do. Because by the time you've let it run for 30 minutes on your chart, you've got all the inventory that's populating on the depth of book, and you can see the stuff changing. So now that I have it running, okay, you can see it. Now, if this EMA crosses down, I'll just go to a second chart. Let's just go to seconds. It works on anytime the market's running, guys. Yeah. Let's go to 15-second chart on the S&P. Yeah. I just want to show you can use it on any time frame you want. Any time frame you want. Very, very lean. That's the point. We have really, really big. We built infrastructure on the database internally, Sharpshooter, to handle that. That's the. I mean, obviously, it's got to load the tick data, but it's very lean. Yeah. So here's a great example of the wall, right? You can see it. Okay. And what's interesting enough is that you can see like I can change the settings. So I can go in here and inside the parameters, see these settings here? Like these are the big, the medium, and the small. And I can set the bid and the ask colors. I have the small turned off, right? But you can see that like this is a pretty high level, right? So there's a very, very, very good chance that this trend is going to continue to take that liquidity. Does that mean it's going to happen right away? No. And if it doesn't, then we're probably going to see new liquidity come in and step up and lift it to take that liquidity. Whatever's going to happen, the market's going to show you this. Okay. Does that make sense, guys? So we're gonna watch this, and these aren't pre-made chart. Yeah, these are templates. These are default settings. But I mean, you can just take a look at the settings. In the pre-market, I like to drop this down to like 50, right? But we have templates. Now, when this happened, okay, this crossed over. And as soon as it crossed over, that liquidity came into the market. You can short that and go right with the market. I want to watch to see if anything steps in. Take a look at this. You see it? See how they pull it? So realistically, it's a pretty quiet time right now. But what I'd be looking for is I'd be looking for any sell liquidity to come in here, which I don't have, right? As a direction, this market is trading down. Now, if this trend continues back up, okay, if this trend continues back up, you can see if it crosses back up, you can see there's buyers adding liquidity in here right now. Now the trend just started again back up. I would love to see some buyers in here. And I would love to see that there's some big orders that come in and actually fill this, because right now there's nothing here to give me any conviction that there's anything. So I honestly believe that there's going to be big trades here. I do believe this. I do think there's going to be some really, really, really big opportunity. And I think that if we don't see anything that comes in here right now, they're going to try to attack this or they're going to try to attack that. You can see it. So the market has to go somewhere, right? And they're going to go where the orders are. That's as simple as that. Now, could you take that as a trade? Absolutely. Absolutely. Could you wait if this crosses back down and you see that crossing back down? Like these are pretty lean EMAs. You could change the settings. I mean, as much as you want. That's a 8 and a 13. You could put a 8 and a 21 if you want, and just make it a little bit bigger. You can see that the trend is still there. So there's some sellers. You see this with direction. Sellers are coming in with direction. You see that yellow line that just came in there? That is with direction. If we start to see yellow stepping in with direction like this, okay, I want to see them. I would anticipate sellers to come in here. I mean, if they're going to feed it back down, I need to see yellow. I need to see yellow come into the market. Yellow came in here, right? Green's coming in now. So we're in a sideways environment, right? You can see this. Green came in. I'm against the direction. So I would really like to see yellow come in. I do not want to be going against that direction, right? Because these are not walls. These are not walls. These are liquidity coming in to fill the market. That's a freaking wall, right? So I would not look to buy this. I would look for him to take this, wait for yellow to appear and write it down. That's when you know absorption is happening in the market. And I'll do this tomorrow when we're going to run this off the open and stuff. And I want to see them take that order flow. I want to see them absorb this with yellow. That would be key. Now it's a pretty quiet time. It's 3 PM. We might not get it, but like, well, there's a big difference between walls. Like that's a wall. You can see it, you know. Look at that line. And that's just clear as day. This is just orders that have to be filled to absorb. If they chew through this, I would love to see some yellow come in. I would love to see some yellow come in. Now, they might not. If this doesn't chew through, this is what I mean by you don't have to take a trade here. Let the market show you what it's going to do, right? Let the market show you what it's going to do. And so what we're going to do is we're going to let the market tell us if there's any liquidity it's going to have. So what I'd like to see is I'd like to so this, see how they take this? If they're not going to absorb through this, which is the liquidity that's been here, if they're not going to absorb through this, I want to see them come in and change, and I want to see buyers step in. I will not trade here. This is where a lot of traders get chopped around. You see this? Look at the buyers coming in. There's liquidity here. What you want to see is you want to let the market tell you what it's going to do. Look, we're still in a downtrend. So if they're going to take this, I want to see them absorb this, and I want to see yellow. If that's the case, then the market's going to drop to down here. That's how you see the liquidity in the market. This is not a level you start buying. Sure, you could scalp it for a few ticks, but do you understand what I'm saying? Like, I want to see yellow here. I want to see liquidity come into the market. I want to see, and if it doesn't, there it is. You see that level coming in there? I want to see it come on the charts. I want to see the levels plot on the charts. There it is, right? So there's a chance I'm in sim. I'm in sim. Let's wait and see if it's going to hold here. Okay.
Order pending.
Let's see if they'll drop it down. I might have missed it because that
order filled.
they chewed
Position
through.
open.
Let's see if they want to take it down. Maybe they won't. Maybe they will. Right. But yellow came into the market as they chewed through that order. Right. You see that? Now they absorbed it. And if I don't get any more yellow in here, I'm going to bail on this trade because if I don't have any more yellow on this trade, then I'm not going to expect the market to go down. If I start to see green, right, then I'm on the wrong side of the market, right? I normally like to see a lot of yellow come in here to do that. And if I don't have any yellow in here, there's no fuel for liquidity. It's a great example of watching a trade happen as it's supposed to happen. If this is going to work, I need to see the yellow step into the market. Right now, there's nothing, but they did chew the buy side. They chewed through that buy side order flow, and there was yellow that got absorbed. So I'd love to see that if there is more yellow, at the time of my entry, yellow was absorbed. It's just not a whole lot of conviction, right? And that's why there's a difference between looking at, conviction, which is this yellow way up here. I'm with the market in this trend, and there's a good chance they might want to come back down to fill all these big, big walls. Anything can happen. But at that time of entry, there was yellow stepping into the market after they took out the green. Does everybody understand that? That's how you understand what's happening. The yellow stepped in after the green was absorbed. And this is how you look at trading directional markets. Now, there's no yellow here. So there's a very good chance that maybe there's no conviction to the downside. Maybe they just want to do whatever here. We don't know this yet. There's nothing fueling big, big conviction here, which is why I like to show this in real time, because big trades are going to happen with big order flow. And until we see one side step in and show its head, you don't really know. That's the key. Now, I am with a trend, and I did enter when I seen yellow step in, but yellow didn't stay. So therefore, I would really like to see some yellow stay. Does that make sense, guys? Now we're down here in support. Now there's a lot of liquidity down here. Lots of liquidity down at the low. So the goal would be is they want to come and take it, hopefully. If not, right? If not, guess where they're going? Make sense? I want to see some yellow come in here. And if not, they're going to rotate against here. And I'm doing this in sim to show how powerful it is to understand what to wait for, right? There's no big levels. There's no walls. There's no levels in here that are saying, hey, like, come and trade me. This is exactly why I'm showing if you're on a trade like this and you have nothing giving you, look at example, there's no sell liquidity in the market. Do you see how this is exactly why traders, when you get in and you have nothing confirming your information, that's the power. Like right now, we're on the wrong side of the market. Unless sellers come in and we see yellow come into the market, there's no sellers. Do you see the power? There's some big yellow. There's some big yellow. And that shows conviction. If they pull it, I'd really like to see more yellow because that yellow is going to force us down. And they pulled it. They didn't stay. That's the difference. That order got absorbed and pulled in, which tells me the buyers are stepping in. Do you guys see that? And this is how you can understand, like, I'm going to close this.
Order filled.
Because I'm
Position
not
closed.
on the right side of the market. Like that's the whole point of the software. Like you can see that there is no liquidity here. Now let's watch the market as it goes up. I want to see buyers come in here. I want to see green come into the market. There's no need to hold on to the market. Like this is, I'm going to demonstrate winners and I'm going to demonstrate losers. I'm going to show you both. Right now, as the market transitions through here, okay, I want to see green come in on this side of the market. I want to see that. Does everybody understand that? Now there was buyers here. See, there's some yellow here. Sellers are coming into the market. They're going to hold the market here, but that doesn't mean this is a reversal level. Like there's a lot of sellers coming in here, profit taking. What I want to see is I want to see green. I'm in an uptrend. I'm in an uptrend. I want to see green. That's the whole point because this is what's making the market move, guys. It's not the EMAs. It's not this. It's the actual flow of the market. And what's interesting is that these walls are here, guys. Like big walls. They got to go and attack that somewhere, somehow. The market has to go to fill that liquidity. So what I'd like to see is I'd like to see buying stepping in, buying. There's some big orders that just came in. Big buyers down here. See that? Big orders, but it could change. It could change at any given time. Does that make sense? This is counter trend trades. See this wall up here? It just keeps going. If that wall kept going, that would be a counter trend trade. If I see buyers stepping here or any green or anything like that, that's an opportunity to buy the market and ride it up to those levels of the yellow. That's the whole point. There's some big sellers are coming in here again. A lot of sellers are pushing in. So if we start to see that, you can see how it stops the market. And that's the whole point is like, it's not order flow executed. This is pending orders. These are pending orders that get filled to absorb the market. Right now, if we're going to expect them to go all the way back up, I want to see green. I'm not going to take any trades to the long side unless I see green step into the market because there's no liquidity to fuel it. Make sense? That's how you can tell yourself if you're on the right side of the trade or if you're on the right side of the market. Are you guys learning from this? Now, if we cross back over, to the short side and have a downtrend, right? Right. Now I'm on a 15-second chart, but let's go back to a 1 minute and show you the different picture. Okay, it's a different story. Okay, so technically, okay, we just crossed to the upside on the 1 minute. So these levels here are essentially absorption levels. Like they're not conviction. Like those are absorption. Like that's where the market's going to go to fill the opposing. Any buyers that are going to be buying in from here are going to exit their trades here. Make sense? So what I'd love to do is now that we've just crossed over, I'd love to see green step in and hold itself. I'd love to see green step in and hold itself. If it doesn't, right? If it doesn't, you can see that they just held it there. And you can see where they're stopping it, which is important. And this is the difference between walls and absorption, little levels, right? So, right, we've got green down here, but we have nothing up in here. We have nothing showing here, which means, you know, here is still There's no confirmation of direction, no confirmation. Now that's a setting. You can change that, be a little bit more loose on those settings if you choose to. You can put maybe 75. Still nothing. 75. If I don't have anything on 75, still I'd love to see 75 hold. Like 75 is still pretty solid. I like to show, I want to see 75 on that. And you can see like little settings, little change in settings will change a little bit more. And that's just how much size do you want to put on that? I'd really want to see some buyers in here. You can see the depth in the dome. Like there's a lot of volume in here, but that's not big liquidity. And that's the difference is we're waiting on confirmation of information that's going to show us good information, right? There's a lot of sellers up here holding the market right there. You can go real granular, brother. You can go real granular right down to the real granular, right? Now, if this came down right here with these EMAs up like this and this spiked down, I'd want to buy that. I'd want to buy that. Like if that spiked all the way down, look at the buyers coming in here. See this? There, that level was green there for a second. See that green level right there? That big green level? There it is. Okay. So I'm going to put a buy order in there and see if they're going to come back and hold it. They didn't come back down to tag it, but we're going to wait. If I get a confirmation of green in here, I'm going to put an order back in here. They didn't, there's no follow through here. So I'm going to wait. Still a lot of sellers up here that are showing its head. And isn't this interesting? You can actually see where the market needs to go to execute trades. There's no buyers in here yet. You see this? There's nothing here that's going to show you the follow through. That's why I'm a little nervous about placing any trades in here to go long. Makes sense? You can see the liquidity of the market. Now, this is where a lot of traders that get all worried about, oh, I'm missing the trade. I'm missing, no, you're not missing anything. Now, there's scalps here. There's scalps here to do this. And like, you can see this, and there's a lot there. But like that, what I want to see is I want to see it get run through. I want to see this get run through. This is very, very important for a trend. This is a trend right now, okay? So what I want to do is I want to see it absorb all that yellow, and then I want to see some green stay in here. Does this make sense? That's the key. I want to see them take through that yellow, and I want to see them give me some green here. But they haven't given me any green. You understand that? That's the key. I don't have any green in here, which means big buyers there's no real big buyers coming in to show us anything. And that's important to understand, guys, is that, and if we're going to really expect follow through with really, 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 really high probability power, okay, I want to see green, and I don't see it. And technically, oscillation is here, right? Oscillation. So this was the low, okay? And this was the top of the range. So there's a wall here and there's a wall here, right? We're coming here, 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 here. We're pushing through. So what I want to see is I want to see that absorption happen. I want to see some green. If I see some green, I'm going to buy the market because that's the liquidity that's fueling the uptrend. And that's the important part of understanding the difference between range-bound markets and understanding directional trends. There's big walls at the top and big walls at the bottom. And until we get to those big levels, right? Remember, if you're going to fade this, which is really powerful levels, okay, you're counter direction. So you better make sure that this is a wall that's been there. Okay, we're getting a lot of sellers in here, not getting a lot of buyers, which means this trend has the likelihood of not going any further. Do you understand that? Now, this is a pretty thick, lenient setting. Like I have it set to 100. Let's go to 100. Right? I like to keep it, very clean. And like, remember I said earlier, if they push this down fast and they just sell it all the way down, there's a big trade down here.
Order pending.
If they drive it. Makes sense? Like they might drive it all the way down real quick in the uptrend. And there's a really, really good chance that they're gonna hold that. Because that wall's been there for the last 1, 2, 3, 4, 5 bars. But maybe that's where they want to take that liquidity from that high, right here. See, there's some buyers coming here, but the trend is still up. So let's wait and see if they want to come back down, fill the level at the low. And this is live markets, guys. I can't control things. I can't share. Like, I don't have a crystal ball, but I can tell you right now that there's liquidity down here at these lows, and we are pushing into an uptrend. So this is a great example of just showing they're coming down, and they came all the way from this level, right? You see that? They might not get there, but that level was there the whole time. Makes sense? You guys see this in real time? You can see these levels. The white level is the strongest level.
Order pending.
So I'm going to wait to see if we can get a fill here. I have to wait and see. They came all the way up to those liquidity levels and then dropped it. And we're oscillating. So you can see what happened. We just crossed. So this is the bottom of the range. There's liquidity at the bottom of that range. It's interesting to see it in real time. There's a wall there. We'll have to see if they're going to come down and actually fill it. Does everybody see it? This is the market. Like, this is not an indicator. This is the market as it's unfolding in real time. This is the best type of demo you could ever have, is when you see it in real time. And then they stopped it right here. Big level up here. At first, it wasn't big. And then eventually it just held, right? So that's why I didn't take the trade. Let's wait and see if they want to hold this level or if they want to come through. And remember, there's levels down here as well, guys. And you can trade these. This is not a big wall. This is what we call like a medium wall. So there's volume here. The market's going to try to fade it.
Order filled. Position open.
So I'll put and see how they came in. They came down to the second level. Let's see if they're going to come into that second level. I'm going to drag it up, and there's orders up here. Let's see if they fill the second order. They came down into both those liquidities. Now, if these are going to hold.
Order filled.
So I'm now long. Okay, 2 levels. Okay. There's no yellow up here for me to take a target. So I'm going to look at the volume in that, and we're just going to see if they're going to hold. Now, remember, this is not a wall. So I'm against trend here. So they're going to take heat on this trade if they're going to keep pushing this trend down. Does that make sense, guys? This is these are level on a level. If this is going to absorb through, right, they're going to show me yellow, right? And they may want to push all the way back up, and depends. If I see yellow coming in here, then that's absorption. They're going to take that trend down to the big wall. If I see yellow come in here, right, and I see that, then that means they're going to come down and take out that big wall. And that's important to understand, is that if you see order flow, and if this order flow is going to hold in here, it's going to lift normally fairly quickly. And if it doesn't, we're going to see the market give me yellow, and it's going to trade all the way against that trend. And so there's a difference between trading reversal strategies and trading trend strategies. Does this make sense, guys? It just depends on
order filled.
There. So I'm trading. I've got out with one of the contracts. I'm going to go to break even.
Order
right?
pending.
And if they want to ride this all the way up, right? If they want to trade to the top of that, I have no yellow in here. So, and if they're going to ride it all the way up and keep going, I want to hold this bad boy until I start to see yellow. And if they're going to keep going down as a trend, then I'm going to see yellow, and they're going to trade trend. This makes sense, guys. I want to let this trade ride, and I want to go back to the yellow. That's the key. And if I see yellow coming in here, then basically that's the end of that trade, right? Like that's the whole point. If I start to see yellow coming in here, because I have it set to yellow, you could have other colors, and pink and blue and purple, whatever you want. Right? But I don't have any liquidity telling me that this market's going to stop here. Now, does that mean it's going to keep going? I don't know. But I can tell you right now that we were in an oscillating market. How do I know I'm in an oscillating market? Because we cross here, we cross here, we cross here, we cross here, we cross there. So the top of this market is here, bottom of it's here, right? And so ultimately there's liquidity at the lows of those ranges. If this is going to go to the top of that range, then it's going to go all the way back up to tack this. Yeah, I will trail my stop, but I'm not going to trail it if I don't need to. I'm going to just let the trade work, right? Now, this is a sim account. I have no skin in the game. There's no real money on the line here. So, I mean, the emotions, there's buyers coming in. That's a good sign. See that? Buyers are coming in and giving me liquidity. See that? Buyers are stepping in. See that liquidity? They're putting the orders in. They're pulling the orders. There they are. They're putting the orders in. If that stays there, that's a good sign that this market's going to keep lifting. They may come down to fill that. They may come down to absorb that order flow. If the market can't lift without it, this is the whole point. And they're going to try, if they're going to go and they're going to keep going, they're going to try to attack the orders at the top of that range. And if the trend wants to continue, because we switched to a downtrend here, if this trend wants to continue down, then we're going to see some yellow come in here. And at that point, I'll close the position. I don't want to give it back to the market. Does this make sense, guys? I don't have any yellow, so I'm not going to get all worried about the market. Because the market is here. That's the market, not this shit over here. This here is the market. Make sense? That was the market. This is the market. That's the market. These indicators, no. The indicators just tell me the state. If I'm an oscillating market, trending market, et cetera, right? But there's buyers that came in here. I'd really like for them to step in again and see it. I'd really like to see some more green. Green stepping in would help this trade. You guys think this cool? Yes or no? Like, I can't control the market. I'm just trading live. And it's a great example of showing you on a 1 minute chart, there was nothing here for me to trade. That's why I like to use the 1 minute. I prefer the 1 minute. It's not so fast. But take a look. I said, if there's no yellow here, I'm not exiting this position. I'm going to hold all the way until I start seeing yellow, right? If I don't see any yellow, I'm going to let the market show me where I'm going. I have no reason to think this trade is going to end unless I see sellers step into the market. And sometimes it'll go down and I won't see anything. And it's just, okay, it is what it is, not a lot of size. They might come down to hit this, right? They may not. They might, I don't have any reason to get nervous, right? But at least I know that if I want to let this trade turn into a much bigger winner, I could. I don't have any yellow. If it comes down and tags my stop, hey, I have no data to make a better decision. They just hit that order flow, right? Maybe they'll lift from here. I'm not sure. They might come down and hit my stop, but I have no yellow, so I have no way to determine that.
Order filled. Position closed.
They came back down to fill that wall, took my stop, but look, that's new liquidity. See it? That's new liquidity. It's been sitting there, right? So I'm against trend. I normally don't like to buy these. I like to trade with the direction. Make sense? Trend is down. So I personally like to wait for yellow to show me that the market's going to go down. And what I'd really love to see here, if I'm really going to get really good follow through, okay, because that was a great scalp trade. But if I'm really going to expect like a big leg, I want to see them chew through this. I want to see a yellow stay on the bar. Why? Because that's conviction that this orders got absorbed. Sellers came in and they're feeling the liquidity go to the wall. This is literally like the best way I can explain a trend is that if this order flow here gets chewed through, which is the orders, and we're with trend, and I see some yellow come in here, oh yeah, like I want to trade, I want to short that. Like I will short that. That's the key. Now I had all these examples planned because I traded it this morning and there was a trend and there was a shitload of other examples, but like you can get it. Okay. Yellow just came in.
Order filled.
Yellow just
Position
came
open.
into the market. Yellow came in, got absorbed. Okay. We're going to had some white come in there. They pulled it. So I had some white in there. They pulled it. So this is what we call an aggressive trade. If I'm going to wait to see if the white or yellow come back. But this absorption just happened, and there was a big spike of white that was there. That's big orders that are getting absorbed in the market on the right side of that liquidity. Does that make sense? So I'm going to hold down in here, and I'm going to try to see if we'll get follow through, but we'll see. I mean, I'm just playing at this point, right? I'm having fun and showing you examples. I would really like to see a white or a yellow level stay on the chart. It didn't stay. I normally like to see it stay. When it stays, I'll go in with size, right? Like it's, and you know, when this trade, when it broke through here, I don't know if you guys seen that, when it traded through, a big white level came here. White's the biggest of the big. So when I see that, I'll normally try to participate in that, but you know, it didn't stay. If it stays, then we really got some serious conviction in the market. That's the key. And they're chewing through on this. They're chewing through on this, but there's a big chance we're going to come down here. Good chance they're going to try to
Order
come down and tag
pending.
that wall. Let's wait and see. Now there's a wall. There was a wall here, but it stopped. Right. So they might come down and hit that, get a reaction. If they pull that order and they spoof that order, right? There's spoofing going on here. You can see it. But like I said, I waited for that absorption to happen on the direction of the market. The big white line came in. I didn't even hesitate. I just hit the sell button because they're going to come and attack that buyer. They're coming
Order
down to it.
filled.
Bang. Exactly.
Position
They're coming to
closed.
touch the wall. The market needs the freaking liquidity. How many of you guys can see that? Like I explained it to the tick. Trading it live. This ain't some fucking hindsight bullshit. This is real markets giving you feedback. They chewed through the buy side in the direction of the trend. At that time, there was a big white spike. Let's go in here, guys, and just take a look at white. White is the color, high value color, big numbers. When you see that, that's what fueled the market to push it to the wall. That was what caused the market to drop. That big white spike as it pushed through the green. The green chewed through, counter trend bounce. With the trend, as soon as that order flow spiked, white came in, hit the sell button. Make sense, guys? Now, this is a wall trade. So if you're going to buy that, that's a big wall. That's a bounce trade, but you're trying to catch the market. You're trying to catch the market. I don't know what else to tell you. See, here's another trade right here, guys. This is what we call pullback trades. Sellers in a trend. They're going to come up. That's a wall. That's your pullbacks. You can leg into these positions. These are, I would go to sell this, right? I would go to sell this, and I would
Order
sell this.
pending.
If they keep coming back up,
Order pending.
these are the liquidity levels that you can sell, or you can just enter here. Like if I see these, I don't have to necessarily let the market touch the level. There's a big white line. See that? There's big white lines. Sellers are stepping in. So when I see this, all right, there's big sellers coming in. Okay. What that means is it's chewing through the buy side. Trend is down. I want to trade on the sell side liquidity. The buy side is not your trades. You see when that white, as soon as that white spike came in, the market just started dropping. Like you do not need to let it retest the level. You can literally enter the trade. It's your choice. You can trade a momentum trade and just get in and let the market jump like I did here, or you can come up for a retest trade. Sometimes you get the retest, sometimes you just get jump on the freaking market. You understand what I mean? Like there's a big white line here in the sand. That is a retest trade. This trade is an amazing retest trade. If we get a push back up to that white level, guys, like this is creme de la creme trades. Like I'm not, and there's a good chance that they may come up, but they may not. And what I normally tell traders is that if you get this coming in and you're sitting right here, just hit the sell button because you're not going to get always the pullback. That's the thing. You're not always going to get the pullback.
Order canceled.
This is the liquidity that's creating the market, guys. So it is what it is. Like I told you, I want to see the yellows come into the market. Now they didn't touch these yellows. Let me explain something. Write this down. The market doesn't have to touch the levels for it to respect the direction. These are what you want to, what you want to see. What you want to see is you want to see these fail. When these fail in the direction and you see a line just start to appear, just hit the enter button, because that's the liquidity behind you, pushing the depth of market. You don't necessarily need to touch the level on an entry to get a really, really good trade, guys. Make sense? So I'm just here to share with you just strategy on, like, if you're in a downtrend, okay, you can trade these levels to the downside. You do not need them
Order
to
canceled.
retest. You do not need them to retest. Okay. Let me ask you a question. You guys enjoying this? Yes or no? It's as easy as it gets. Now, see how the liquidity is moving? Markets are moving. These are downtrend levels. You see that? So I would wait to come up and retest this. This is a retest trade for sure. And there's levels here. I would size in with 3 lots. I would go in here with 1. I would come in here
Order
with
pending.
another. I would come in here with another. And I would let the
Order pending.
market use that liquidity in the trend. And we'll see how it works. Because this is where the absorption happened on the other side of the market. Big absorption. They put their liquidity in the market. At the time of that happening, you could have just shorted. There's more liquidity here. We're expecting sellers here, guys. I expect sellers to come from that. You see what the white does? When you see white, look at there's big sellers coming here. Yeah, see, you can see as soon as the white comes in, guys, you can hit the sell button. They just hit the sell button. If you're on the right side of the trend and you see white step in, hit the sell button. Like, you're going down. You see, as soon as the white comes in. Do you understand that? Like, we didn't even get a pullback. The big sellers came in, boom. They just drop it. Where do they go? Fill the liquidity. I couldn't have asked for a better example. Sure, we lost the beginning part of the I had a lot of other examples because I traded the open here quite successfully. But what's interesting is that, you can see as a trend kicks in here, you can see how to participate with this. And, you're not always going to get the pullback to the entry. You use the liquidity to just get in the market. And it's incredible. It's incredible because you see these walls here, and I don't use them as entries. I use them as targets when I'm against the trend. When I'm with the trend, I will trade this. Make sense? So I'm going to close these orders because there's no need for me to
Order canceled.
explain things, and more, like, there's levels here, right? There's a liquidity level here. You could enter on this. That would give you an opportunity to sell going into the close.
Order
Not that I
pending.
encourage that, but this is
Order pending.
level on a level here. Okay. It's just that you're with trend, right? So when these levels come in like this, these are great examples of retest opportunities. This was a great example of when the market just stepped in, hit the sell button, right? These are momentum trades that are giving the follow through. There's liquidity above and above. So this is where I look at these levels and it's like, okay, if we're going to get a pullback trade in here, that's probably where the pullback's going to start filling the cells. And you can see it. You don't have to worry about the dome. Like, if I go back here and I add the dome and I try to find my orders, like, I don't know, like, is anything in here saying, like, telling you anything? Like, I can't make sense of that shit. Like, maybe you can see something that I don't see. Yeah, I don't see anything in special in the information that would cause me to want to, like, be excited about trading that level. You know what I mean? And that's the point. You can trade the NQ or you trade the S&P either way. S&P's got great respect to the volume. Nasdaq's got great respect. You just at different settings, right? Like I'm not interested in selling here. There's no reason for me to sell. Like I told you earlier where the sell was. I entered as soon as I seen white come into the chart here. It just they absorbed it, right? Because they tagged it. In this situation, white came in and they just dropped it. So I just go into the, there's yellow, yellow is coming here, but I would be a little apprehensive about trying to trade yellow so far away. I mean, we've absorbed, but I'd want to wait for a little bit of a better location. Tell me, yes, you guys see the benefit of this. Like, I mean, I mean, you could put other indicators on your chart, and that's totally fine. I'm just saying that this is the market. Like, this is the market, and it's really nice when you're in alignment with conditions, right? Like when you're in alignment with conditions, and you understand you're on the right side of the market. Like there was really great shorts here that came down in here earlier today. I would assume that there's some long order flow in here. But I mean, at the end of the day, it's, you know, 15 minutes to the close. And we'll see if they come back up to spike into that at 74, 75. See the yellow here? They're pulling it. It's spoofing. You see this? That's spoofing. If they keep it there, that's different. But they keep pulling
Order
it.
pending.
You see that? They keep pulling it.
Order canceled.
So that's just people putting orders in and then pulling it out. And waiting on the white, right? You're waiting on the white. Yeah. See, there's yellow. See how they're pulling it in. Yeah, I would really want to see them stay on the chart. It has. There it is. You see it? It's toying on the line of, yeah. So there's a yellow line here. These are. Oh, there's some white. Yeah, there's some white. So white's coming in here. That's the wall. You see that white line right there? So I would arguably think like a lot of times you can just enter short because a lot of times it's just going to drop. You don't need to wait for the retest. You see how it's dropping? As soon as the white comes in, it's like fucking just drops. Look at it drop. You can't deny what you just seen. As soon as that line came in, the market just sells off because this is the wall that's supporting this. Look, there it is. You can see, I can't stress enough. Like, yeah, like I don't actually wait
Order
for whenever
canceled.
the white comes in, I just hit the sell button. If I'm on the buy side, I hit the buy side. Like the wall doesn't need to be touched. Do you understand that? The wall doesn't need to be touched to enter the trade. So this is very, very important. See how they pulled it? You say, well, what do you mean? I don't understand. I thought these were trade I thought they're let me explain something to you. Okay. Let me explain something to you. Okay. The market doesn't need to touch the levels for you to take the trade. The liquidity forms here, which pushes the market down. You understand that? This is the biggest lesson I learned about the big orders. When I see that white levels come in like that, and I'm on the right side of the market, if it came here and I'm trading here, there's a very, very good chance that the market's just going to drop because there's so much sell side liquidity coming in here that it pushes the market down. And this is what I had to learn. I didn't really understand that at first until I learned that watching the market. And then I realized, holy moly, like you don't actually need to enter at these levels. You can use the added liquidity as it spikes in here to realize, okay, they're pushing it down. They're controlling the flow of the trend. And this is what I mean by, guys, like I told you, if the white comes onto the chart, just hit the sell button. Like it came in and the market just impulse down. That's what you want. That's why I entered. That's why I entered here. That's exactly why I took the trade here. And it just shot down. Boom. The same thing just happened here. Boom, shut down. Same thing happened here on white, shut down. So if that's not an amazing enough example to
Order
understand
canceled.
why the market's doing what it's doing, then I don't know what else to tell you. But I'll tell you right now that it don't matter what you're trading, right? If you're going to buy the market, okay, on these levels, what you want to see, okay, if you're going to try to catch this knife, which a lot of traders are trying to do right now, these levels are liquidity for these guys who sold up here to take their profits. You got to understand that, right? So if I'm short from here, profit, 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 right? So what's important you understand is that if you're trying to be a buyer in this market, I would wait for the market to transition, wait for the buy side liquidity to push the depth of book up, which is what you want to see. You don't need to fight the market. Now, if we're in a market that's going like this, then look for the walls above and below price. That's the key. That's the key, guys. Okay. Then I'm going to do some training on this. We're gonna trade the open tomorrow. We're gonna do a big AMA tomorrow, guys. It's exciting. We're gonna do live trading. You guys want to trade live with me on this stuff tomorrow? Trade the open. You guys open to that? Okay, so give me a second here, guys. Bring this down. I'm just on a big screen, so I gotta change the view. Lots of exciting stuff. Did you guys enjoy this? This is different trading. This is real order flow trading. Like this is the hard right edge. Like you're trading the real market. You're not trading hindsight. Okay. Let's see what we got going on here. Who wants a free license? We got somebody in here with a link. Pete, you want to do me a favor and put that link up in here
I got
for
it,
everybody?
Sean.
You
I
got
got
it, Jeff?
Yep. Here we go. Click on that.
Okay, click on the link. It's in the chat box, guys. It's going to bring you to some type of a survey or a giveaway. That way we can pick the winner during the event and everybody knows who won. Makes sense? Great. How many of you guys learned something today from that? That's as real as it gets, man. Trading live. That ain't a sales pitch. That's calling it as it's happening, as the order book is unfolding the information to me. Okay. I could show you, I mean, I could show you the open. I could show you the trades I took, but it really, it's hard to tell like when the order book's not on the chart. Hey, Branko says, I learned more about the market in the last 2 hours than in the last few years. Thank you for that. Yeah, and guys, I'm here to tell you that like this is just the beginning. Like if you're trading sweeper, if you're trading one and done, and you see buy side liquidity take the breakout on the open, like you better put size behind those trades. Like Jeff, when you're in the trade room and you're trading the one and done off the open, and all of a sudden you see you're taking a long on a breakout to the upside, you see buy side liquidity coming in, like that trade's going.
You bet.
Like that trade is going to go. And this is what I mean by like you have information, right? You have information that can fuel your decision making, which in my opinion is the key. Okay. So do we have a winner? Winner, chicken dinner? Did everybody fill it in? Let's kind of go through this, guys. Are you guys okay if we go over pricing now? We've got an amazing launch discount for you guys. Remind yourselves that if, in order for you to participate in tomorrow's AMA with me, you're going to need to purchase the software today because it's only for customers. And obviously, we've got incredible pricing right now for this. I'm going to do some extended training on this with you guys because the only way to really trade this is in real time. Like I can show you historical information and I can show you examples, which we'll do. But I really like to call it live because there's nothing better than seeing it unfold in front of your face because it gives you a level of belief that you can't get anywhere else. And that's what I love. Okay. Michael says, why not disregard everything and wait for the white bars? Now you're onto something, Michael. That's called being the discipline. That's a black belt. You just said, I want to be a black belt in karate, and you're willing to do what everyone else isn't. Sit there and be patient, right? But at the end of the day, you don't need to. You can just trade in the direction of the order flow, and we'll get into that, right? Daniel says I should win awards for this product. We just won a really good award, actually. Best prop trading technology, yeah. Okay. So we're going to get into that here in just a second, guys. Let's go over pricing. You guys want to go over the costs and what's included and everything in that? Take a look. They came right up to the level, right? Like, you know, I can only share this with you. Look at, they came right up to the level. And I told you this. They came down. There was the white level right here, right? Please fill out the poll, guys. I need everybody to fill out the poll so I know how to give you guys the links and give you guys all the information, okay? If you're not purchasing, hey, I get it. But if you are, I need to know. Here's a great example. They came right up to the liquidity on the pullback, right up to this liquidity on the pullback. It doesn't get cleaner than this, guys. And take a look. White came back in. White came back in. As soon as white comes back in on the trend, guess what happens? Sell. Whammo. Okay. I'm telling you guys, this is next level. You're not going to get this. You're not going to get this in any other place. Tons of liquidity coming in on the close. Look at the liquidity coming in the close. You don't want to be trading that bar. Don't trade the liquidity on the close, guys. You can see why it's nuts. This is a great example of like why people get their asses handed to them on the close. Like, how can you understand the liquidity there? Look at all the buying and the selling going on here. This is balancing of big orders. And there's nothing else going on here other than massive confusion. So there's a great example of the market close right there. Look at the bar. It just goes to show you why the market open and the market close, don't trade the first bar, right? Is depth of market? No, depth of market, not top of book. Depth of market. Depth of market. Okay. Now I'm gonna just go and change a setting here. I believe it's at 99. Yeah, it's at 199. That's a good setting. So you can see here what happened as soon as the white came in again. That's exactly where they came to touch it. The retest came in on that white. Like you could have entered on this bar when the white came in because that's when the white did come in. They spiked up to hit those levels. But this is what I mean by like they came up to test that level in the downtrend, right? Like it's that simple, right? And you can see the white on this bar here. I'm going to just make this a little bigger so you guys can see it. They came up to test that and they slammed it, right? So yeah, it's exciting. So I'm super pumped, guys. Like this software is very different than anything we've ever built. It is the future of our trading rooms. I'd like to think that Jeff is going to use this in conjunction with everything that we look at. You can put levels on your chart and you can just see how they coincide with each other. I can promise you this, that it works on anything that has depth of market. You need data for depth of book and only thick markets, David. So I wouldn't go and try to trade this on small caps, but if you are trading stocks like Apple, Google, Amazon, Facebook, Meta, Nvidia, all of that, the dome is pretty solid. Yeah. So you'll have the depth of market there. Yeah. Make sense? Give me a second, guys, while I try to find the link to get the data. Give me a second here. Give me 1 second. Yeah. So if you go to this website, it's called get.dxfeed.com. Okay. You can do it in the members area of Tickblaze as well. So if you log into Tickblaze, okay, and you just log in, you come up here to dashboard, you see market data, click on market data, and you can just click on this page, get DXV data here, but it just brings you to this. You can just do this. I'm going to put this link directly in the chat box for you guys to buy the data. There, I put the link directly in. You can put non-pro if you're a non-pro. Don't lie on this. They will catch you. If you've ever been audited, I got audited a long time ago and it cost me thousands of dollars. So if you're a pro, pay pro data feeds. If you're not a pro, don't pay pro data feeds. Like it's the law. So ultimately here, you see here it says market depth bundle. This is it. Like it's just $100 a month. Like for $100 a month to get everything that you need, it's a good trade-off, right? Okay. Yeah, just email in Morale if you need to upgrade. There's a special thing that I think Ashley and the team has to do, but yeah. So like I would just click on the CME group market depth and yeah, it's that simple. Yeah, makes sense. Easy. Perfect. And just do it month to month, right? And you can get through that and it's quite simple. Yeah. Market depth includes top of book. So if you have top of book, if you've already purchased top of book from DXFeed, you can email them and say, hey, I'd like to upgrade to market depth. It's that simple. Yeah. Do we need the full group to trade? If you're just seeing me only is 39. Let me just go back to that link that I just posted so I can show you. If you do not want the whole group, look, if you don't want the full bundle, it's $100 a month, right? But if you don't need the CME, the CBOT, the NYMEX, and the COMEX, and you only want CME, right? If you don't want that, it's the CME group. But if you only want that exchange, then you can just go to here to just market depth. It's $39. Yeah. If you only want the ES and the NASDAQ, you can just pay for this one at $39. Market depth. You understand what I'm saying? So that if you're not trading crude oil, if you're not trading gold, you don't need this bundle up here. You just get more value for the money if you want to look at other markets. But if you never trade that, L2 data, market depth is L2 data. You need market depth is L2 data. Top of book is L1, market depth is L2. Make sense? Yeah, subscriptions run from the first of the month to the end of the month. So if you're planning on getting data and you want to use this, you might want to subscribe on the first of the month. That way you're not having to pay data feeds for 5 days. So it's not, but I mean, that won't let you use the tool tomorrow, but I mean, we still have 10 days left of this month. So obviously I still think it's worth that. But I mean, if I was only a couple days, I wouldn't do that. But I mean, you still got a full week of trading. So I mean, you can make a lot more than the $39 in a week of trading. Yeah. So it's just common sense. Tools to do the job, right? Tools to do the job. Now we have different settings for this. Like we have different colors for this. It really just depends on what you like to see. I've just trained myself to see the white on the black backgrounds, but you can change the colors to whatever you want. Maybe you want bright red to be the white, and that's the key. Like you could go in here and you can change the colors. Yeah, bright red is the white. So that's a great example of like when the red comes in, right? You can see the red coming in, boom. What's interesting is that as soon as the red came in, right, the market dropped. It didn't touch the red. It just dropped the market. As soon as the red comes in, it just drops. What that's telling us is that the depth of market is being pushed by higher liquidity in the dome. And sometimes it comes in and tags it, and it's just a really, really great opportunity. Like these trades are great retest trades in the direction of the trend. But yeah, I mean, ultimately, it's a choice, right? Do you guys prefer the gray backgrounds? I can set my colors up in the morning. Do you guys prefer the gray backgrounds? I don't mind the gray. I think sometimes it's nice to see them. Let's take a look at the light gray. Let's take a look here. How's that? A little bit easier to see. And then what I'll do is I will change the settings right now. Let's do this. So that's 250, 199. And then I can set the colors. This can be like high value, could be like navy, right? This can be, cyan. And this can be, I don't use them. So cyan is, yeah. So let's just do that. So I would do like, right, that. And then I would do pink, and that's probably good. So I know that that's the answer. And then the depth of market, yeah, you can set that. I'm going to set these as a default. Yeah, so let's do that. Yeah, it's great. You can see the depth of markets changed, right? So you can see the liquidity's changed, markets have closed, right? But it just goes to show you that if you know you're trying to buy the market on strength, these blue lines are big liquidity. And what's interesting is when the big liquidity, please increase the size of the mouse. I can't on this. I can't, but let me just grab a cursor. I'll draw it. So how about that? Is that better? When you see the mouse? So like this is a big liquidity wall, right? And even though it wasn't there, they pushed through it, right? And as soon as we pushed through it, what was interesting is as soon as the big sellers came in here, you could enter any time during this bar, right? And just drop it. Like you don't need to be perfect. Like, you're riding the freaking market, right? And what I like about the direction of the market And let's just change these. I'm going to add some EMAs here. If you guys could do me a favor and just please answer the poll. It's really important that you guys answer the poll so that we can follow up with you and we can answer questions and get you guys what you need. Let me just go in here to add indicators. I'm just going to add exponential moving average, 2 of them. I'm just going to put like some EMAs on the chart. We're going to just do this as for tomorrow. Let's change this to like 21. Just like that. So you can see here that as soon as we're on the right side of that trend pushing down, okay, you just need to understand how you're participating on these levels, right? Like I'm really all about understanding how I want to participate on order flow. It's not a matter of being perfect. It's a matter of knowing how to trade the market the way the market's trading it. So in situations like this, which is really unique, okay, so let me explain something. I would argue the fact, and I know you can't see it because we loaded the platform here, but I would argue the fact that as soon as we crossed here, and then crossed back here, that's the start of a range. That's the start of a range. And when we see this, this is very, everybody wants to know is how do I know if I'm in an oscillating market? And the answer is very clear. Look at the EMA crossovers. So if I have an EMA crossover like this, okay, that was the high that created that crossover. This is a lesson that took me years to understand this. Please pay very close attention to this. If I cross down, that was the high that created that cross down. If I cross back up, that was the low that created the cross. Until we clear through that level and that level with strong EMAs, okay, I'm going to be fading the ranges, which is important because technically, okay, there was buy order flow here probably, and there would have been buy order flow here. This was buy order flow. This was the sell order flow at the top of the range. We could have shorted this if we were following this concept because we're not in a trend. Does that make sense? And this would have been a great short if the market came up here because we're still not in a trend. But as we took out this is really, really important. As we took out this floor here, okay, on this software, and we came in here like this, and we took out this floor right here. We took out this absorption. This is what I call absorption. This is liquidity absorptions, okay? And why is this important? Because we took out the range and we absorbed the order flow. As soon as the order flow absorbed, we seen the other liquidity step in. That is the difference between knowing that we're going back into the range or we're going back down south with that trend. And that is the difference between understanding what to expect. Like sometimes you'll have a range that'll get faded like this. Like, see this? This faded outside of that range and it didn't continue. I would argue the fact that there wasn't any buy side liquidity in here when we broke outside that range. And I can't see the picture here, so I'm still guessing because I don't have the story. But what I will tell you is that as we took out this floor, the sellers showed us in the order book that the trend is going down. And that is ammunition that executed order flow will not show you that. Executed order flow will not show you that. You want to know why? Because that line is not executed order flow. That's inventory that's still in the depth of market. That's inventory that got historically recorded in the depth of market. And this is the difference between executed footprint charts or other charts, right? And I really, really can't stress this enough is that, you know, I really like trading directionally because when you're directionally trading the market and that information steps in, holy moly, man. And let me explain why. Okay. Like this morning when I was trading the open, okay, let's go to the open. Okay, like there was a massive trend here today. Wow, that was a big trend. Huge shorts today. Okay, so let me explain this. Off the open, okay, off the open, we were sideways, like consolidated sideways. So for me, I was fading, I was selling the highs, okay, and I was buying the lows of that range. Does this make sense to me? There was walls here, so much that I can show you them in a picture. I want to show you this. There was walls here. I took the screenshot. Give me a second. Right here. You see this? This was the story this morning. Okay. I'm here to show you this so you can see it. This was a sideways price action, right? Very choppy open. Okay. And so there was all these walls up here and all these walls down here. But I didn't know the direction of the market. So I'm scalping these as bounce trades because I don't have conviction. I don't know the direction yet. And I could have got a lot more out of that. Like, holy shit. Like I could have got way, way more out of that. In fact, technically, if you think about it, look at, I got in here. The reason I bailed is because yellow stepped in, but I could have rode it all the way back up to the top of that liquidity. You see this? And this is the point, is that when you see the information, you know where to go with the trade. That's the difference between just, oh, I wonder where they're going. Order flow that's executing in a footprint chart tells you nothing about where it's going. That's the lesson that I like. Executed order flow in the bar just show you what's happening now. This shows you where the market's going. And that is powerful, right? And so as the market traded back up through here, okay, there was a wall here. I know this because I shorted that, okay? There was another wall here. I shorted that here. I took a quick scalp, like little tiny base hits, guys. But what I'm telling you is that as soon as this absorption, this was sell side liquidity. This was sell side liquidity. And as soon as we chewed through it, if you go back and I don't have a picture. I don't have a picture. I don't think I have a picture. Let me check here. Give me 1 second. Yes, I do have a picture. I do have a picture. Thank you. Look at it. I do have a picture. As soon as we chewed through that information, as soon as the buyer stepped in right here, do you see this? Right? That's the same as the white. That's the same as the white on the buy side. So I changed my colors to dark blue for tomorrow. We'll be able to see it. But as soon as that came in, you could have just purchased here, just bought and rode it all the way back up. And they actually went up to here today. So like that could have gone all the way up to here. Right. So it's a matter of understanding that. Right. That they rode it all the way up to 66, 96. I think they tried to get up to 68. They didn't quite get there. That was my mistake. There was a big wall here. They rode it to here instead. But there was buy side liquidity here on these wicks that you could have taken that long as they broke into that trend, exit on that order flow. And then here's the information is that we broke back down in here. So what I'd be looking for on this crossover is there anything that gave me an opportunity to sell on the way down? But look now, this is really, really important. We had a crossover here and we had a crossover here. Do you see this? Do you see what I'm saying? We had two crossovers here. This is very, 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 very important. You pay attention to what I'm about to share with you. I'm going to draw a box around this. From here to here. That is a large range. So knowing this, if there was buy side liquidity coming in here, I would be trading it to see any wall on the outside of this. If there was sell side liquidity here or buy side liquidity on the other side, like if this is a wall and a wall, I would look to trade up to the wall or back down to the wall. And if you look at what took place today, they came right to the top. I don't know what was there. Let's go take a look here. I just want to see on the picture because I really want to show you this. Yeah, it was right there. You see it? 67.89. 67.89 was this big freaking wall all day in the morning. 67.89. Let's draw a line here. 67.89. 67.89 right there. There it was. That was the wall. And they came all the way up to that wall and they dropped it. And that's oscillation. So how do we know we want to short this? Crossover to crossover, which is that's the top of a range, that's the bottom of a range, until we break through it and we see sell side or buy side on either side of that range. I'll teach you this tomorrow if we get another example. But what's important is that when we get through this, let's continue down. If we had levels here, which I think we did, I'm really glad I took the pictures because I'm going to show you this. We had some levels here, right here, 67.60. Really, I'm glad I took these pictures. 67.60. Okay, so let's draw another line here on the sand, okay? 67.60. I'm going to copy this over. Right there. That was the big wall from this morning. As we broke through that, I don't have any other pictures here, but I would arguably think that there's big liquidity coming in on the opposing side of that absorption, and that's why we had that. I can tell you that was the range. They drove it down, and this is the difference between waiting and understanding. I would not be looking to buy this. I'd be waiting for it to absorb and give me the sell side on the other side so I know the trend is dropping. Now, today is an abnormal day. We had a pretty large sell-off in the market, but the same information that happened here in real time, and it almost certainly happened right there as well. Do you understand that? Like, it's not going to change tomorrow. Like, the way the market respects order flow is going to be the same tomorrow as it is the next day and the next day, because liquidity is liquidity. So I hope you guys are learning from this and you guys see value, because I'm here to help you trade it and I will help you teach it, learn it. Okay. Makes sense, guys? You guys learned something? Hopefully that was valuable to you. Hopefully you guys found value in that. Type a yes that you enjoyed the presentation, and Jeff's going to follow up with all of you guys that are requesting calls back. Thank you guys for participating on our webinars and, you know, being a valued customer. We're grateful for all you guys, and you can just sense the passion in my voice when shit actually works really well. Like, this stuff is amazing.
You know he likes it because he's been going for over 2 hours.
Well, I just believe in it. Hey, Jim, nice to see you, man.
How
Yeah,
you guys doing? I couldn't resist. I had to come in and join the fun, man.
good. Yeah, it's
I'll,
honestly, it's an incredible product, right?
I'll
So
tell you
this,
guys, look, you know, for what it's worth, you guys know I'm pretty straight laced. I was cut and dry. I don't do fluff. I've been trading this thing over the last week or two here. I don't know that I've had this much fun trading in a long time. This
it's
thing
different.
is insanely good. So you guys are gonna love it. I'm excited to see what you guys do.
Yeah, guys. So listen, we'll be here bright and early tomorrow morning, and make sure you get a level 2 data feed. And you know, I think the link is in the chat box. Again, you guys can go back up and see it. I think it's there. Pete, can you post the link one more time to get the product? And make sure we put the links in there and we're good. We should be good, guys. Have a fantastic evening. I'll see you bright and early mañana. Looking forward to it. Looking forward to seeing you guys got and how you guys make it happen. Take care, traders. We'll send you guys a recording, and bright and early. Early bird gets the worm. Talk soon, guys. Bye.